Hello viewers, welcome back to ICT Trading Concept. I was thinking that I would like to make a video about yesterday's macro session. As you have all known already, if you were with me in Twitter, I took entry in Nasdaq though. I will talk about even S&P first, then I will go to Nasdaq. Though I was thinking that I won't talk anything about macro anymore, but I have decided I should have talked about yesterday's video because I have missed something from my last videos. I never show you about the even S&P, about the macro. So I thought it would be a great decision. Also, it will help you to understand the macro, the market structure shift as well. That's why I'm here. So in this video, you will learn how to, how to actually do the macro session again one more time. Okay, I don't want to spend too much time with, in introduction. Let's go to the chart. If you see over here, uh, I'm just going with 150 to 210 macro and 250 to 310 macro. It's because in morning session we had two news. One was at 10 a.m. Another one was at 11 a.m. So we didn't have any chance to take entry in the macro session. Not even any other, strategy. It won't be acceptable if there is great news or big news. Okay, so we actually skip the morning session, and I don't trade even S&P for near about 1 month. I actually am trading in Nasdaq, but I will show you about the macro, what macro did in even S&P, and then I will go to the Nasdaq and I will show you over there as well. Sorry. So here is even S&P, and I'm here in 1 minute chart. The rules, you will go to the 15 minute, 5 minute chart. You will do everything by yourself. I'll just show you how macro worked yesterday. Okay. If you see when price came to the macro time, 150. This is 150. This blue line and this blue line. This is 150 to 210 macro. Okay. So when price came here, it went above and cleared all of this sell side liquidity. Just let me mark it. It is cleared all of this sell side liquidity. When price came inside the macro, we saw that macro actually cleared the sell side liquidity, the buy side liquidity. Then it went lower. Some of you will think this is your market structure shift, but that is not my market structure shift. Again and again, I'm requesting you guys to watch the video I have made about the market structure shift. You will find it to my YouTube channel, and from there in the study section you will find it how to avoid the losing trade. Okay, if you have watched that video, you can easily skip so many losing trade. So it's very important for knowing the market structure shift. Who is swing low or swing high, you will choose for your shifting market structure. It's very important, guys. I'm requesting you again and again, please go and watch that video. It will help you to avoid at least 100 losing trade. So it didn't meet the requirement for being a market structure shift swing low. That's why this is not my market structure shift. So when price cleared the liquidity and went lower, then I got this big run. You see the run, it happened at 206. That was my market structure shift. I didn't trade here, but I'm just showing you how do you decide the macro. Okay, so when I have seen this run, I just mark this one as my liquidity taken. Okay, this was my liquidity taken, and when I have seen it has taken the liquidity, and there was my market structure shift. That was my market structure shift. Why this high I'm choosing for shifting my market structure? If you watch that video, you will know this swing high actually traded the fair value gap over here. Okay, this candle high and this candle low, there is a fair value gap, and this swing high actually traded this fair value gap. So it has made one requirement for which I need one requirement met out of two. So if you just watch my video, you will understand why this swing high I choose to shift my market structure, why this swing low isn't eligible for shifting the market structure. If you already know this is not the swing low which you will as your market structure shift, you can easily avoid the sell from here. Okay, you won't take sell here, because you will know this one is not market structure shift. Trust me guys, if you watch that video, it will be, you will thank me later. Just trust me, you will thank me later. So when I have seen this, I will say, if you have seen this market structure shift, immediately you have to mark the fair value. That was your fair value gap. So the very next candle, it went to the fair value gap, then went higher. Okay. So I will just, if I just put it there, and the minimum rule is which candle will make the fair value gap, you have to put your stop loss below this, below that candle. Okay. But for more, I mean, more people, the more conservative people, you can put your stop loss just the previous candle's low. It is, more conservative. If you are care about risk reward ratio, trust me guys, when you will follow this macro rules, you will see that you will take, I mean, 8 to 7, 7 to 8 winning trade out of 10. So you don't need to think about your, I mean, the losing trade on. Okay. But it's up to you. You can put your stop loss depending on your strategy or your money management, whatever you can say. I actually put my stop loss depending on price. So I would put my stop loss over here, and the target, it should be 5 handle, 5 handle for mini S&P. And if you say, it took 3 minutes to give you 5 handle, just 3 minutes. Okay. So that was the first macro for mini S&P, and now I'll go to the 250 to 310 macro. So, and the rest of the things, I mean the 15-minute marking high, marking low, all you have to do by yourself. And if you just watch this and you start to think that you are learning, then you are in a misunderstanding. Okay. You can't learn by just watching. When you will watch this, you have to straightly go to your chart. You have to do all of the things. I mean, you have to go to the 15-minute chart, you have to mark the swing high, swing low, then you have to come back, I mean, you have to go to the 5-minute chart, then you have to understand, I try to understand what price did, then you have to come to 1-minute chart, then all of these things you have to do by yourself. When you will start to do this by yourself, later you can easily catch this move. Okay, before it happens. But right now, if you just watch the video, and if you think, okay, you are learning, then you are in a misconcept. So please, I don't think I'm rude, but okay, whatever it is. So I'll talk about 250 to 310 macro. So this two blue line, this one is 250, this one is 310. When price came into the macro, it went higher. When it went higher, and guys, one more thing, when it will be inside the macro, you don't need to think about higher time frame. This is the best part of the macro strategy. Okay, I'm telling you, you just backtest it and then give me thanks. I will get your thanks, I know that, because I tested it. I did so many trade depending on just only macro. Though I really love to learn new things. That's why right now I am trading with different strategies, which I am actually sharing with you guys. From this week, I have started from this week to share with you, I mean, the price action. That is the most important thing. I mean, when you will understand the price action, you can just jump to the chart and take the entry. You can take the entry. This is the, I can't explain how beautiful feelings is that. Okay. So I'm just started to sharing how to read the price this week. If you are with me in YouTube and also the Twitter, then you will know how beautiful it is. Okay, so I'm just talking about when price came to the, the macro. I saw that first it has actually cleared this buy side liquidity. You see this, all of these highs, it has cleared this buy side liquidity. So that was my buy side liquidity. Now I was waiting for a market structure shift to the lower part. Okay. So when I have seen this move, I didn't get any market structure shift over here. It went little bit higher, then again went lower. This is a very nice displacement. Still I don't have any market structure shift over here. Why? You will understand why this is not, I mean, I'll just mark this one. Why this is not market structure shift for me, you will know that when you will watch my how to avoid losing trade video. You will understand very beautifully why this is not market structure shift. Okay. So please guys, it's a request again and again, please watch that video until you clearly understand that video. Watch it again and again and again. If you can easily, I mean clearly understand that video, trust me guys, you will easily avoid thousand losing trade. Trust me, just trust me one time, okay? And it's not a longer video, it's a very small video. Even I'll put the link to the description, or end of the video you will see, it will pop up to the, I mean the screen. So if you can go from there, as you wish. I mean, I just want to I want you to learn who is swing high or swing low. You have to choose for shifting the market structure, and if you can know that, you will avoid so many losing trade. So that's all. So when I have seen this move, I didn't see any kind of market structure shift over here, okay? So I actually take this as my liquidity taken. That was my, I mean, liquidity taken. And also if you see from here, it is also actually, it actually went below this low. So you can mark this one as your liquidity taken, as you wish, okay? After this I got this move. That was my market structure shift. This high has shifted the market structure. So that was my market structure shift. And the market structure shift, guys, this is the rule, it has to happen inside the macro. So I got my market structure shift over there. Immediately I should have marked the, I mean the fair value gap, and that was the fair value gap. You have to take your entry. You can take your entry just immediate after the macro. You can take it. So when you will see this candle went, I mean came to the fair value gap, you can just take your entry over there. And rules is, you have to put your stop loss just which candle has made the, I mean the fair value gap, you can put below the I mean the candle. But the another thing is, we have a nice, very nice breaker actually over there. If I see any kind of breaker like this, I actually put my stop loss just below the breaker. That was my breaker, and I'll show you why this is breaker. You see, low, high, lower low, okay? I mean just low, high, lower low. So this is the highest candle, highest up close candle, and that is two consecutive candle. That's why I marked both of them as my breaker. In that case, if I see any kind of breaker like that, where I just put my plus just below the breaker, okay, a little bit like maybe one or two tick below the breaker, I put it my stop loss over there. And your target is five handle for elimination, okay? That is your five handle. So if you see risk reward ratio, it's two handle, I mean the two. And if you are little bit, I mean aggressive, then you can hold your trade depending on your strategy or anything. But if you would like to I mean trade depending on only macro, then you have to follow this rule. You have to stop when it will hit your five handle, okay? So that is the rules, guys. And if you see, these two were also the winning trade. And I will go to, I mean if everything is clear over here, I think everything is clear. But if you have any confusion or any kind of doubts, you can just comment below the video. I'll try to reply you. Okay. So now I will go to the Nasdaq, and what happened over there, I will show you that as well. So in Nasdaq as well, as I won't go to the, I mean, 15-minute or any kind of chart. I will just go directly from the 1-minute chart. Okay. That will be easy. And I will explain as well the trade entry I took yesterday. I uploaded that entry to my Twitter account as well. I will explain all of them, okay? But before that, I will just go to the macro so that you guys can understand why there was no entry at 150 in, I mean in Nasdaq. Sometimes that's the thing I missed for my last videos, that I told you you have to watch even S&P and the, I mean the Nasdaq market. If you watch I mean both of them, the both of this market, you will get at least one entry every day, guys, every day. And this is the, interesting thing. You will take all the win trade. Don't think like that. You will take the losing trade as well. I'll say you why I missed. I mean why it was a losing trade over here. Why I marked my swing low mistakenly. So I'll just tell you that later, okay? So first I should have talked about the macro, okay? So here is the macro. If you see closely, when price came into the macro, it went higher, cleared all of this buy side liquidity. Okay, you don't know where price will go. You just know where is the swing high and swing low from 15-minute chart, nothing else. So when you have seen it has actually taken the buy side liquidity, you are waiting for your market structure shift to the lower part. And when you have seen this, you mark that as your market structure shift. Okay, this is the thing, guys. This is the mistake you do. That's why you take the losing trade. This is not market structure shift. I need at least at least one requirement out of two. This load didn't meet any of them. That's why this is not my market structure shift. Please go and watch that video. I'm telling you again and again. Watch that video. It will give you the confidence to take entry in the, I mean, how to avoid losing trade. Okay, it will help you. Trust me. So when this was not my market structure shift, I should have marked this one as my liquidity taken. Okay, that was my liquidity taken actually. So when I have seen this and I was waiting for a market shift, what I missed, I am telling you why there was no entry for me. Yeah, I think some of you guys maybe saw your entry over there, but I didn't see. Then I saw this high. This high actually is eligible for market structure shift, but the candle, you see this bull candle and this bull candle, there was no fair value gap. No fair value gap. When I have seen there is no fair value gap, I just sacrifice this run. I didn't have any trade over here. I saw this run inside the macro. I just let it, yeah. So I saw this high actually crossed this high. I mean, I'm talking about this high. Just let me mark it. So that was my market structure shift actually with a fair value gap. So there was my fair value gap. If you have seen the screenshot to my Twitter, you have seen that I put a box over there, but market didn't came here. Okay, when it was inside the macro, I mean here, 210 right here. So after immediate macro, it takes too long to come to this fair value gap, and in the meantime it has actually cleared all of this buy side liquidity, all of this buy side liquidity. So it didn't actually give me any confidence to take entry after too long. I mean the macro. Okay, so I didn't have any entry over there. And let's go to the 310 entry. Why I took a loss over here? I told you all, after 7 winning macro trade I got a loss. Why I took loss over here? When price went above, when it was inside the macro, it went above, so it has cleared this buy side liquidity. And you see this buy side liquidity, it has cleared that. It's my mistake, guys. I'm agree with you. And then I have seen this swing low. Okay, let me mark it. This swing low, I I put it as my market structure shift. It's because it has actually, I mean, traded a very little fair value gap. I was just make my market like this way, and I saw this fair value gap. Let me just mark it as well. I saw this fair value gap. So that was my mistake. Okay, I forced market to do, I mean, to go with my direction. I forced market. I can't do it. You can't just take this type of decision with your real money. Like, if you see very clean, this is very clean. You see market structure, I mean the fair value gap. If you look over here, this is very clean fair value gap. But if you see this is not a very clean fair value gap. So I shouldn't mark this one as my fair value gap. What happened? Come here. Come here. So I shouldn't actually mark this. I shouldn't mark it as my fair value gap. And if I wouldn't do that. I mean, it is the chart. Maybe I can skip this loss. Okay, so I forced market to, I mean, to give me a setup with my direction. I shouldn't do it. If I wouldn't do it, then I would have a very nice, trade. If you just mark all of these lows, I mean the sell liquidity, this was actually the sell side on. And then inside the macro I got, I got the market structure shift over here. If you see closely, that was actually the market structure shift. And one of my brother, he told me that he took this loss and immediately he took the buy. And if you mark, brother, I'm telling you, yesterday you messaged to my Twitter that you took a short over there and then immediately you took a buy. So if you mark this low, I mean this low as your market structure shift, then you are wrong. Okay, you are wrong over there because this is not market structure shift. This low didn't meet my rules, so you can't mark this one as your fair. I mean the market structure shift swing low. Okay, this is the wrong market. I mean swing low for shifting the market structure. But when I have seen this one and there was my fair value gap, if you see this was the fair value gap. Just let me mark it. This was the fair value gap, and there was so many liquidity over here. Okay, so if you see this run and this was just immediate after the macro like 1 2 3 minutes, two within 2 to 3 minutes you will take this entry, so that should be your entry. I didn't take it. It's because I was just little hazy. I was just doing something else in that time. That's why I didn't take that one. I took my loss and later I actually mitigate my loss. I will show you all of them. So that should be your uh, trade. Okay, your stop loss should be just below the candle over there, and your target would be here. And if you really love, I mean love the breaker, then that was your breaker. And if you take put your stop loss depending on your breaker, you can put your stop loss over there. If you put your over stop loss over there, that is also a very nice trade. But I recommend you not to mark the breaker if you don't know how breaker works very clearly. Please don't depend on breaker because this is very, very hard to mark breaker. You don't know how. If you don't know, then just don't take risk. If you see the risk reward, it's on 1.48. 1 is to 1.48. You don't need to think about this, guys. If you mark this, that was my mistake. Okay, I marked this low as my market structure shift because I was forcing the market. That was my mistake. But if you look at the macro, we can say that this is the number 8 winning trade in from last Monday to this Monday. There was 8 format, 8 setup. All of them are winning trade. All of them. Every single trade is the winning trade. Okay. If you have any confusion, you just go to my YouTube channel. From there, study section, you will find it to my playlist study section. I've not a study section. You will go to the macro section. Then you will. I have I have actually made all the analysis from last week. Monday, Tuesday, Wednesday, Thursday, Friday. Every week, every day, we had at least 7 setup, and all of them were winning. And if you see this one also the winning trade. That was my mistake. I admit that was my mistake. I forced market to make that as my entry. Okay, that is my mistake. But macro, it worked very beautifully. So if you are a little bit conservative, you can go over there. If you have any other strategy, like if I took this entry, my target would be here, the consequent encroachment of the opening gap. But if you just would like to take your entry depending on macro, your target should be here, only 20 handle, and it's not a small, it's huge, guys. Trust me, it's huge. So that's all for macro. Now I will go to the entry I took yesterday because that is the thing I'm actually talking with you guys. So if you see, I took my first entry over here. Here. Why I took that entry? Okay, that was the before this, all of this were the morning session. The slow run, that was actually the morning session. Then it came down, and at the start of the PM session, that means from 1 p.m. I saw this run. It went above, below the opening gap. When I have seen this, and I got very sharp run over there. Okay, I didn't need any market structure shift over there. I just took my entry depending on the price. That is the price action I really would like to, I mean, share with you guys. Okay, You don't need market structure shift. You just need to understand the price, nothing else. Okay. So when price came, below the opening gap, it should have used this opening gap as its resistance, but it didn't do it. On the other hand, that was a very sharp run. When I have seen this sharp run, and it has cleared all of the liquidity from the lunch hour. Okay, from 12 to 1, that is the lunch hour. It has cleaned all of the lunch hour liquidity. That is the price action. You have to read this. You have seen that, okay, it has cleared all of the lunch hour liquidity. Also the relatively equal low. You can mark this low and this low. They are the relatively equal low. So market actually cleared all of the relative equal low, then went lower, break the opening gap. That was your opening gap. I mean, yesterday, the Sunday 5, sorry, Friday 5 to Monday 9:30, something like that. I don't know. You will just go over there, regular trading hour, and then you will find this opening gap. Eh, just let me show you. Just a minute, okay, guys. I'll just show you. So that is your opening gap, okay? Where is it? Oh man, I don't know. You will go over there, and like you see this candle, it has just stopped over there. So next day when 9:30 will open, I will mark this candle high and 9:30 opening. Okay, that will be my opening gap. I don't know where the opening gap exactly over here. I marked it, but right now I didn't see it. It should be here somewhere. I don't want to make the video more longer. You will just check it. Okay, it's your duty, not mine. So that was my opening gap, and when price break the low, the all the liquidity it has taken. I was in 1 minute chart. Sorry. Mhm. So just a second, guys. Okay, here. When I have seen this, it has went below the opening gap and then this sharp run. I just take my entry. You see, when just price came to this blue line, that is the new week opening gap low. I took my entry over there, and my target was to this. This consequent encroachment of the opening gap. Though I have actually marked my, my target was above this equal highs first, but then I have decided, okay, I will just close over there. So I took a partial over there. You see the cross, and the next one I just closed over there. So that was my first trade, and it's huge, guys. Don't think it's small. From here to here, it's near about 36 handle. So that was my first trade, and the very next trade I took it. I saw that market actually went higher. This is all depending on price action, guys. I'm telling you again and again. This is all depending on my price action. So when I saw this big run, and then it has just started to go lower, and that was the silver bullet zone. Okay, silver bullet is one of the best time of a session. Like in PM session, silver bullet is 2 p.m. to 3 p.m. That is the heart of the PM session. Okay, and in the morning session, if when you'll see 10 to 11, that is the heart of the morning session. Heart, you understand what I mean by heart. That is the that is the center of that session. Okay, so when I have seen market actually went higher, it has cleared all the buy side liquidity and it started to go lower, and I saw this very nice I5 lookup. That was my I5 lookup. So when price break this I5 lookup and go back to that, I took my entry. But my entry placed over here, it's because all of you know I had some internet issues yesterday. That's why it took later entry. So I took entry over here, but I wanted to take my entry over there when it has just touched the I5 lookup low. Okay, I wanted to take entry over there, and my target was this equal lows. You see this equal lows. I told you before it happens. I tweeted to my Twitter, guys. I know you have already marked the sell side liquidity. The specific level, 14,899. So that was my target. But if you are aggressive, then you can target this low as well, because later you can see it has, I mean, you can target your entry, I mean, the trade depending on your strategy. But I always look for the, I mean, the most obvious place where price could go. That's why I don't care about risk reward ratio as well as my losing trade. I never care about that. So if you see, that was my trade. If I would, I could take entry from there. That would be like near about 19 handle bet. But actually, I took my entry to from, I mean, here. So that was near about 14 to 15 handle. That is also good. I'll show you the whole result. Then I took this loss. You know why I took this loss? Because I forced market to make the setup for me. And then I took here. This is the trade where I talked about a lot in my YouTube channel already. If you saw my, if you have seen my previous, I mean, previous videos, you will know whenever I talk about this, I talk very confidently. Okay, if you see there is two fair, I mean, two fair value gap on above another, then you have to take your entry to the upper fair value gap, and your stop loss should be just below the consequent encroachment. It is because the below the consequent encroachment, it actually works as a breakaway gap. So it will, you will put over here, and my target was here. There was a 1 minute fair value gap. I mean, I am talking about this gap. There was this gap, so this gap low was my target, but then I closed it manually. It's because uh, I mean, I just placed my stop loss too fast. It's because it has already 4 p.m. So I didn't want to hold my price for this consolidation. You see this consolidation, so I just put my stop loss above, and then I stopped out. So overall, that was my entry. From there, you see, when just it tapped to the fair value gap high, I'll just remove it, this one. When it has tapped to the high, this fair value high, I was in the market. I took one partial over there, and another partial I just stopped out over there. So that is all for today, and I think it is insightful. It will be insightful for you. So that we can see that, we can say that actually we had 8 winning macro trade. Okay, I was forcing. That was my mistake. I am totally agree with that. That was my mistake. But overall, that was, this was my yesterday's trade. So this on the first trade, I took two partial. So that's why it's showing two. I mean the two green winning trade, but that was one trade. I took first partial. Then it has actually hit my target profit. Then I took this entry, and then I took this loss. This is the last entry. I closed one manually, and then I stopped out with the profit. So overall, that was my entry from yesterday. And if you guys are with me, I am gonna just show you how to read the price. Okay, and that is end of this video. If you are new and think this is insightful, please give me a thumbs up, and if I like, give me a subscriber as well, and share my video to new people so that they can know about my videos or my, sharing information. That will be really grateful for me. I hope everyone will be okay. Please take care of yourself and take care of your family as well. See you guys. Bye bye.